Gotta be honest. Oh, being recorded. All right. I gotta be honest with you, Melissa. It's not very often where I get invited to come talk about taxes and the things you should be doing when you're thinking about your business. So I figured it's late at night for you guys over there on the East Coast. So you just wanted a nice bedtime story or something to help put you to nice sleep so you can get a good night's rest tonight. But no, but I appreciate the opportunity to be here tonight. I'll try not to take too long. I could talk a long time about this stuff, quite frankly. And so I'll try not to take too long so that I don't keep you guys from your bedtime and whatnot. But, you know, Melissa asked me to talk a little bit about kind of maybe I'm starting my business 101 type stuff, so that for those of you that are starting to become leaders within Zingular, you're starting to earn a pretty meaningful income in your daily and monthly checks and whatnot, how you can help to make sure that you're securing that income and making sure that's safe, but two, how you make sure that you try to minimize the amount of taxes that you're going to be paying at the end of the year. Because like she mentioned, if you're not ready for it, if this is the first time you've been doing this as a home-based business or as an entrepreneur, you kind of become pretty surprised at the end of the year when you're finding out, oh crap, I not only have to pay my personal income taxes, but there's also this, what they're calling self-employment taxes and all this stuff that you're like, holy crap, the government's taking a lot of money from me right now. So anyway, so I thought we'd spend just a few minutes kind of talking about maybe some of the basic things that you probably should be thinking about as you're starting to grow your business and to become leaders within Zingular, or quite frankly, just any home-based business, any entrepreneurship endeavor that you do. These are kind of good things just to kind of keep in mind for those types of things. And all along the way, or maybe at the end of this, I'll kind of give you a little spiel, and then at the end of it, I'm more than welcome to stay as long as you need to answer any questions that you may have that may apply to you. So now let me just start out by saying I have to always give this disclaimer that I am not your tax advisor, nor am I your legal advisor. So what I'm giving you tonight is some things to think about. But I always ask that you always go and find a tax advisor specific to your area and that can sit down and really talk with you about your situation to see how some of this may apply to you. And it's really not that hard to do. I mean, you usually can ask some friends, say, hey, do you guys have a good tax person that you guys use? And they're always willing to look for new business. So that's usually pretty easy to find a good tax advisor near you. But with that being said, that's kind of my disclaimer, my caveat. With that being said, the first thing I wanted to go over for most of you, and again, some of this may be kind of mundane and basic for you, but I'm hoping that if you don't know about it, it'll put some things in your mind to start thinking about. The first thing is, as you start growing in your home-based business and as you start making meaningful income and whatnot, you really should start thinking about the possibility of setting up and creating a legal entity, that your business is actually becoming a legal entity. Up to this point, a lot of people, especially if they just were a stay-at-home mom or trying to do a side hustle, you've kind of treated it just kind of as a sole proprietorship where you just reported it on your own personal income tax return at the end of the year. As you start growing, you want to make sure you're starting to protect those assets and making sure that you can take as many tax advantages as possible. So the first thing I always tell people as they start making more meaningful income is you really do want to start looking into creating an entity. Now that sounds a little bit more daunting and scary than it really is. A tax advisor, a good tax advisor can have you an entity set up in a really short order within 20, 30 minutes of actually meeting with them. It's not that hard. So there's two different entity formations that I generally like. The first one is by far the most popular one that you'll typically hear of. It's an LLC, a limited liability company. That has a lot of advantages to it. I'm not going to go too much in detail on it, but that has a lot of tax advantages to it and simplicity advantages to it. It's somewhat similar to the second one, which I'll call an S corporation, an S corp. It's very similar in some of the tax benefits, except the S corp becomes a little bit more formal in some of its reporting requirements and some of its structure requirements. But when you're talking to your tax accountant, say, hey, I just was talking, or I just heard this presentation, I'm thinking about a legal entity, does it make sense for me? I would recommend that you ask them about one of those two entities. I would say an LLC, which again, that is by far the most popular and common entity for a home-based business type or a startup entrepreneur. Those are very common, or an S corporation. So I won't go into the huge benefits of either one of them, but again, one of the reasons you want to start setting these entities up is it, one, allows you to start taking tax deductions for regular expenses that you don't normally take if you're just a sole proprietor. So it allows you to do that. And two, it also starts to help you set up a risk structure such that your assets of that company are protected and separate from you individually. So if, for instance, something ever were to go wrong or something were ever to happen, the assets and someone wanted to come after you legally for whatever reason, if they wanted to come after you legally, they would come after the assets of that business, but not you personally, as long as you set it up correctly. So anyway, so again, I would start to think about and talk to your tax advisor on, hey, does it make sense for me? Does it make sense for me yet to start doing this? Now, I will say this, when you set up one of these entities, you do now have two tax returns at the end of a year. You'll have one tax return for your LLC or S Corp entity, and then you'll then still have to file a personal tax return. So you don't get out of filing a personal income tax return. You still have to file that, and you now have a business, so you have to file a tax return for that business. But again, really simple to do, and your tax advisor can help you with that. Relatively inexpensive to file a tax return at the end of the year. So that's the first thing. The second thing I always tell people is, as you start setting up this entity, well, now you have to treat it like a real business. You can't just have your personal bank account and tie it to this new entity that you just created. So along with that entity, you'll want to make sure you also create a separate bank account that's tied to this entity. So any of your commissions that you receive, you'll want those commissions to be being deposited to this entity. If you have that entity, if you have your current organization under just your personal name with Singular, you'll want to work with compliance to get that switched over to your new entity, so that those commissions can then get paid to your new bank account. And it's important to kind of keep those things separate because, again, as far as protection goes, it's important that you always segregate your business assets and your business income from your personal, because if you start mingling those together and like you put your business income into your personal bank accounts and you use a personal email to be doing all your business, then it becomes very easy for a judge or someone later down the line to say that you really didn't have an entity. That was just a shell corporation. You didn't run it as an entity. We're going to treat it all as if it was just your personal thing. So make sure you set up that bank account and have all your commissions kind of go into that bank account. You can always take distributions. It doesn't mean that the money has to sit in that bank account forever. You can do a distribution from that account to you as an owner. That's fine. You can do distributions, no problem. But you do want to have it there. And then it's a good idea to have a credit card or a debit card or something that's also tied to that account. And so if you have business expenses, you can run it through that that business bank account as opposed to your personal bank account. Now, I will say this though, even here at Singular, I use my personal card. In fact, I just booked 2 flights last weekend for some trainings I have coming up, and I used my personal credit card to do that. Well, it's no different from you guys. If you use your personal credit card, all you need to do is submit an expense reimbursement form to your business saying, hey, I bought a flight on my personal credit card. You need to reimburse me for that. And then you just reimburse that out of the business account. So the biggest thing there is make sure that you actually treat it like a business, that you're not just being like, oh, well, I'm going to go buy groceries and you use your business bank account to buy your groceries. You really have to keep those things kind of separated. So that's with the entity and the bank account. Those are the 2 things. And again, from a high level, just remember, just when you're talking to your tax advisor, just say, I'm interested. Let me know what you think about this. And again, it's not as scary as you may be thinking in your mind. It's really not. For those of you that have an LLC or some other entity, it doesn't take that long to create, and it doesn't take very long to file the taxes at the end of a year as well. So that's the first part. That leads me then into the second part, which as the finance person I love to talk about, right? Taxes. Who doesn't love talking about taxes, especially late at night? Awesome, right? But as business owners, and as you guys start getting more income, there's a couple of things, and this is with the new entity that you've just created. With that new entity, there's some deductions that the government allows you to take that are significant and can become pretty awesome in allowing you to get tax savings at the end of the year. So a lot of you are familiar with kind of the W-2 wages. All through our lives, we grow up and we're employees of someone, and we earn a salary. They give you a W-2 at the end of the year, and then you say, hey, here's my income at the end of the year. The awesome thing that is for an entrepreneur like yourselves, home-based businesses, if you set up this entity, what you can do is, you get your income, right? You get all your commissions, and that's income to you. But before you report your taxable income to see what my tax bill is going to be, you can say, well, here's my income, but here's all of these deductions that I can take from my income. And that gets you to a much lower tax bill. So you can say, now I have a much lower taxable income, and now what are my taxes? And so you'll want to take advantage of some of these tax benefits. Now, I will say this. The government does require you to have 3 hurdles that you have to overcome to prove to the IRS that you're actually running a business and not just sheltering income from taxes. Because again, you can't evade taxes, right? That's illegal. Tax evasion, that's not a good idea. Never want to get into that. But you do have to do 3 things to make sure that you're doing it. But I'll tell you this, every one of you on this call is already doing them. They're super simple. First one is that you have to have an intent to make income. Well, you say that, you look at me right now and you're saying, oh, that's stupid, Josh. Like, why is that even a requirement? Well, people that make a lot of money, sometimes they'll just set up shell corporations, shell entities, that all they're doing is running these losses through these shell entities to evade taxes. That's not a good thing. So if you set up the entity, you have to prove that you're in it to earn income. Well, all of you guys on this call are already doing this, so no brainer. Number 1's done. So you don't have to worry about that one. The second one, you have to put time and effort into it. And just the very fact that Melissa has you on this phone call tonight tells me that you're already putting time and effort into your business. So if the IRS ever challenged you to say, well, are you really putting time into this? It'd be very easy for you to prove that you're putting in time into your thing. And then lastly, this is the biggest one for tax deductions. You have to be willing to keep some logs. No longer can you just kind of use your debit card or your credit card and then just off you go. You kind of have to start keeping receipts. You have to keep some records of what you're actually doing, so that at the end of the year, at the end of a quarter, however often you're going to meet with your tax advisor, you can provide those records and receipts to your tax accountant so that they can make sure that they're taking the valid deductions for you. So that's the biggest one. But honestly, it's not that hard. And that's what we'll go through for the next few minutes here on what does that look like for the logs, that you're going to need. So the main things, tax deductions. So I always I don't know if you guys ever watched David Letterman, but he always had his Letterman top 10. Well, I've come up with the top 5 kind of home-based business tax deductions. And there's more than this, by the way. There's more deductions than these, but these are the 5 kind of very common tax deductions that you really should be thinking about taking advantage of. So again, so you now have your entity, you have a bank account set up for that entity, so you can really make sure you're keeping different bank accounts, segregating that from your personal accounts. And now you're going to start taking advantage of some of these taxes and keeping logs. So the first major tax deduction that I'll go through for a lot of entrepreneurs or home-based businesses are inventory purchases and promotions. So let me clarify. When you purchase inventory for your own personal consumption, probably not tax deductible if you're purchasing it for your own consumption, right? That's kind of like grocery bill. You don't really deduct your taxes for groceries that you buy and consume yourself. However, if you're buying inventory and using that as samples or to give away to help grow your business, stuff like that, all of that is certainly tax deductible. And you should keep record of that. So what's it look like? What did I buy? How much was it? Who did I give it to? And on what date did I give it to them? Right? It doesn't have to be hard. It can be pretty simple, straightforward. Keep it in a notebook. Keep the log for it. Keep the receipt of the inventory that you purchased. And that becomes tax deductible for you. So if you paid $100 to get some inventory, you just had the watermelon resist come out, and yeah, you got one bag for yourself, but you're like, ooh, this is delicious. I want to get a couple bags so I can sample it out to people. Well, say you bought $100 worth of resist and you gave those out to people, that's $100 of tax deductions that you can take. So you can deduct that right off of your income and minimize the amount of taxes that you're paying for stuff that you're probably already doing. Many of you already kind of do this. The same thing, by the way, goes for promotions. I know a lot of you guys, a lot of the leaders of the company, they run on top of what we do at corporate. They kind of run their own promotions and games and incentives to help incentivize their team to grow the business. And all those types of promotions expenses, again, whatever you bought to give out to them, whether that be a swag item, you got them a cool hat that you went out and you branded it Singular, or you got shirts. I know the shirts are really popular to give to your team and winners of promotions. All that stuff, keep track of that. If you bought it and gave it away as a promotional gift, that is tax deductible. So make sure here at Singular, that is one of the biggest tax deductions that we have as a corporation, because we're running promotions, we're running incentives. When we take people on rewards trips, those are tax deductions for us as a corporation, and it's no different for you as your own business. And so make sure you keep track of those things. Even though you may be on a much smaller scale than Singular Corporate, those are certainly deductible. So inventory purchases and promotions. The next one, and this one you all are doing, vehicle allowances. So here's one where the government allows you to deduct 56 cents for every mile that you drive related to business. So the benefit of this one is, again, if you guys are going to city meetings, if you're going to regional events, if you're going out to dinner with a prospective client, and by the way, going out to dinner with prospective clients, I'm not your tax advisor, but I lose that term very loosely, right? Because it could just be one of your good friends. And you go out to dinner with one of your good friends and you start to talk about your business. Well, you talked about business and you went out to dinner and you had to drive there to do it. And so keep a log. And again, on this one, what's the log look like? Where did I go to? Right? What was the name of the place that I went to? How many miles did I drive? Right? And did I discuss business at this event? Those are the types of things that you want to keep track of for your vehicles. Now, again, on this one, be careful though, because the IRS, if they ever do audit you, which by the way, the risk of audit is super small for an individual, and even for your entities, super small risks of audit. But if they ever do, they may challenge you saying, oh, well, you say that this was 20 miles to this place. I need you to prove it. You just get on Google Maps and you show them, yep, this is 20 miles, right? But that's why it's so important that you can't just say, had dinner on this night with this person, because if you can't remember where you went, the IRS isn't going to allow you to deduct that. So you have to make sure you write down where you went, keep that log where you went. But the vehicles, again, 56 cents per mile adds up very quickly. So you can take that deduction. So that's the second one, second of the top five. Third one of the top five is meals and entertainment. So this is if you ever take a prospective customer, prospective distributor out to dinner, or you're saying, hey, you know what? You're killing it, and one of your team members is killing it. I want to take you out to dinner to say thank you, to reward you, for how awesome you're being. All those meals and entertainment expenses can be deductible. And the good thing is, well, In 2020, they're 100% deductible, right? Because the government gave us a little bit of an allowance there that if you took people out for meals and entertainment, that you could deduct them. But they're normally only 50% deductible. But again, if you take them out to a nice dinner, it costs you $50, $75, half of that you can write off as tax deduction. So that's a big savings. Now, the beautiful thing of this one is, again, I'm not your tax advisor, but if I was, I would tell you that term can be used relatively loosely. I mean, if you take a friend out to dinner, and again, you get onto talking a little business of how you're doing, and even if you're not like prospecting them per se, I would still be a little bit aggressive and maybe take a tax deduction there for that type of an expense. So that's the third one. Fourth one is travel. So I know Hillary and Melissa and Stacy, and some of you others of you may have just been at the XLC event that we had in Orlando. If not there, you may be coming to the Zing Fest event that we're having down in Texas in October. Those types of travel expenses can be 100% deductible. All you have to do is make sure you keep a log. What was the cost? Where did you go? Did you get training? And at every one of these, you can say, yeah, absolutely, I did. I got training, right? Like at every one of these events, I got training, I got motivation to build my business. I got understanding about new products and how to sell our products. So all of your airfare, your cars, your gas, if you're doing gas, plus the mileage, by the way, your hotel room, your food while you're there, all of those things can become tax deductions for you. And again, these are usually expenses that you're already incurring. So like already, I know that Hillary and Melissa and Stacy were at the XLC event with us. I saw Carrie on here as well somewhere, but they were at XLC. That's already an expense that we're incurring anyway. Why not take advantage of those costs, taking a deduction? So as you set this new entity up, make sure that you can take advantage of those travel allowance, those travel deductions. So make sure you keep good record of that. And then at the end of the year or at the quarter, you can go to your tax accountant and say, hey, listen, I went to this Zing Fest event. Can't I deduct some of that? And they'll be like, oh yeah, absolutely. How much did you spend on airfare and blah, blah. And then you just give them the receipts. So that's huge. That's a huge one for travel that you're already doing. And quite frankly, somewhat of a quasi vacation too, right? I mean, we've all been to those events. It's awesome. I mean, we get training, but then we also have a good time together, right? We all hang out, have fun in the evenings. We go out and do things, have dinner together. It's a lot of fun at those events. So, so that's always a good deduction to have. So that's the fourth one, is the travel. The last one I'll just talk about just briefly here is the home office. Now, many of you have probably heard about the home office deduction, that if you're using in your house, you have an office that you use for business, you can take a percentage of your housing cost, and I'll talk about that in just a second, and deduct that as an expense. Now, let me add a huge caution on this one. And this is what I talked about at Fling as well. A lot of people want to take advantage of this home office deduction, and rightfully so. And you can do it. You just got to be careful about it. This is probably the number one thing that as an entrepreneur, the IRS will look at. So if you take home office deductions, just make sure you're not trying to game the system. You're not trying to evade taxes, because they may look at this one. But it is a valid deduction. So here's how it works. If you have an office in your home that you use solely for your business, then you can deduct whatever cost, the percentage of that cost from your taxes. So for instance, if your office equals 10% of the total square footage of your home, right? We'll just make easy math. So 10% of the square footage of your home, well, your utility bills, you can take 10% of your utility bills and deduct them as a tax deduction for your business. You can actually depreciate that portion of your house and take significant tax deductions for the depreciation on your house for that 10% of your house. If you have to do maintenance and repairs, that type of stuff can be deducted. But on this one, please make sure you work with your tax advisor. It can be a super powerful deduction, but you have to make sure you're doing it right. One of the things that trips the people up the most, this is the most common mistake, is that they say it's a home office, and they have their computer in there and they use it, but then they let their kids come into that office and they let them play games and do email and do all their homework in that same home office. Well, that there disqualifies that home office as a home office, because really it's just another house, another room in the house. And so you need to make sure that, and you're like, well, how are they ever going to find that out? You would be shocked, like how they do it. They actually will surprise visit sometimes. Like they'll just knock on your door and they'll see people. So anyway, just be cautious. I'm telling you, it's out there because it's a super valuable one. Just work with your tax advisor to make sure you're doing it right. Yeah, I see right here, Stacy, you just posted something about your truck, that they allowed you to deduct a portion of your truck. Again, find a good tax accountant. You can find a lot of deductions, right? Like I know that Terry Bryant up in Washington, she has a car that's kind of the old Zingular green. It's not the new branding, but it's the old Zingular green and whatnot. And she deducts a portion of her car too, because she says, I'm using it for my business. So there's a lot of deductions out there. But anyway, so what I hope you understand is that as you guys start becoming more entrenched in Zingular and the home-based business, these are types of things that you really need to start considering. Because again, if you think about it, you're starting a business. You're running an entity. You are the CEO of your business. And it doesn't matter if it's not as big as Zingular, it's your own micro entity within the Zingular corporation. It's a business nonetheless. And so treat it like that. And at a certain point, which most of you are probably getting to, at a certain point, it makes a lot of sense to start setting up the legal entity, to start making sure you're taking advantage of these tax deductions. Because if you're starting to make meaningful income from the Zingular business, you can save a lot in taxes. So with that, I'll open it up to the floor. Melissa, I don't know how you want to do this, but we can open it up to the floor for any questions, or if you have any other thoughts. Again, I'm probably not going to give personalized tax advice here because I'm not going to become the personal tax advisor guy. But if you have general questions, I'm more than happy to answer any of those.
Well, I'll start it off while people start putting questions in the chat. What would you say is a meaningful income?
You know, that's a great question. The tax compliance, Melissa, the tax compliance costs with this. So to set up the entity should be under $100. It's that simple, guys. Like it should really be super simple to set up this entity, right? An LLC. So that's a very minimal cost to set up. Your annual tax compliance costs. So the annual, hey, tax accountants, I need you to help me file a tax return for this entity. Maybe a couple $100, you know, 100 to a couple hundred, depending on the size and complexity. As you become more, as your executives and silver executives, and it may be more than the $100, 200, 300. But usually it's pretty minimal costs to do something like that, $300 or something like that. So when you say what's a meaningful income, you know, I'd honestly say, hey, listen, if you're bringing home $1,000 a month, I mean, that's $12,000 in annual income. Well, it's pretty minimal cost to actually have them help you file this stuff. And if you can take a bunch of deductions, then I would take them. Now, the other thing I would say, Melissa, as you listen to me talk, if you don't have a bunch of deductions, if you said, yeah, I'm not doing the travel deduction, I usually don't use my car that much, blah, blah. By the way, your cell phones can be a deduction. I mean, there's a whole bunch of them out there, guys, that we could keep talking about. But then maybe it's not for you yet. But if you feel you can take advantage of some of these deductions that you heard me talk about and cell phones and stuff like that, then I would say set up an entity. You'll come out ahead in most instances. So certainly by the time you're a director, Melissa, I would think you're thinking very seriously about setting this type of structure up.
Okay. A question. Someone has an LLC as a certified business coach. Can she put her Zingular business under the LLC that's already established?
Yeah. Yep. Like if I'm understanding that right, their LLC, I mean, their Zingular business currently is probably under their own name, but they have an LLC as another business.
Mm-hmm.
Yep. Certainly they could put that business name with the Zingular. Now, just know though, by doing that if you are a certified coach under that LLC, you're now combining the assets of Zingular with that one. So if you ever got sued for doing your coaching business, they would then be able to get at the assets of the Zingular that you're earning from Zingular as well, because now that's all one entity. So they're not separate entities anymore. So they would now be able to go after that. But again, if that's such a small risk, so few of us are ever going to get sued in our lives that I would just combine them.
And then another question was, would it be possible to set up a DBA under her already established LLC? This is another person.
Yeah, so yeah, you can certainly set up a DBA, which for those of you know, this stands for doing business as. But the realities are the DBA, even though you may have a coaching entity, going back to our last example, you have a coaching entity that's your LLC, but you also want to kind of do Zingular stuff. And so you do DBA, doing business as Zingular coaching or something like that. Just know that the DBA is not a legal entity unto itself. And so while you may be able to hold yourself out as doing business as that name, the entity itself is still that LLC coaching one, but you can certainly, yes, set up DBAs in most cases for LLCs.
Okay, if someone uses their RV as an office, can they write off the cost of the RV?
Yes. Again, talk to your personal tax advisor, but if I was your personal tax advisor and you could prove to me that you're using the RV as your sole place of business, then I would be saying, yeah, absolutely, I'd let you write some of that off. Now, cautionary, if you're using your RV also to go camping on the weekends and stuff like that, you start getting into some gray area, right? And so make sure you talk to your tax advisor on how much they think you should write off associated with that RV.
All right. Is there a limit per person that you can write off for gifts?
For gifts, like giveaways and promos and stuff like that, I'm not familiar with one, Melissa.
Okay.
I'm not familiar with one. I know there's limits, like for instance, on charitable contributions and charitable giving and stuff like that, there are limits. But on promotions and giveaways type stuff, I'm not familiar that there's a limit on those.
Awesome. All right. Anybody else have any?
I have a question.
Okay, go ahead.
So, with our products that we purchase, even with them being, for personal consumption, they still, that PV that is attached to the product still goes towards our ranking and, being eligible for, getting 100% commission and, leveling up or whatever. Could we not write off all of that because it goes towards our QV or whatnot for the month?
Because you're saying, Hillary, hey, I have to purchase this in order for me to continue to rank up, to grow my bid. And quite frankly, if I want to earn commissions, I have to have 120 PV. Is that the question? So why couldn't I write some of that off?
Yes.
Yeah. Again, an aggressive tax accountant would tell you, yeah, certainly we can take some of that and probably write it off. The cautionary tale to that though is, and in this industry, if Rena were on this call, she would slap me right now, because what you just described is a pay to play scenario, which the FTC would certainly not appreciate, where they say, well, you have to pay in order to get commissions. And what we always say to that is, well, they don't have to pay, because you could have just customer, not member, but customer volume, and customer volume equates to PV, right? For you guys, as you know, the compensation plan. So you really don't have to pay anything. If you had customers that came up with your whole 120 PV for you, then you can earn commissions for that. But we all know that the realities are most of you just buy the 120 PV and you use it for your personal purposes. And so that's the cautionary tale is, again, some tax accountants may say, yeah, absolutely, let's deduct that, because if you need to buy it in order to be earning your commissions, then let's take the deduction. But that is a little bit of gray area on that, especially when you're using it for personal consumption.
Makes sense. Okay. Anybody else have anything?
I do.
Go ahead, Vicki.
The question I asked was about gifts a minute ago. And I'm not talking about promotions or giveaways. I'm talking about like we do team gifts or just buy something for somebody on our team or something like that. Is there a limit on that? Because I've heard there was, but I've never seen it in writing.
So Vicky, if I'm understanding you right, you're asking like, it's not a promotion or a giveaway or anything like that. It's simply, you're just buying something and giving it to someone on your team for whatever reason.
Right, a Christmas gift or something like that.
Yeah, Christmas gift, whatever. Again, Vicky, on that, I'm still not familiar of a limit on those. Again, I'm familiar with charitable deduction limits. You know, you can only give so much to a charitable organization. I'm familiar with, you know, healthcare deductions. You can only deduct a certain amount of your AGI as health stuff. But I'm not familiar with a gift exclusion. And typically, like for instance, I equate this to every year we get people gifts around Christmas time. You know, we get executive gifts and we get our owners some gifts and whatnot. And our accountants have never come to me, nor in my training have I ever heard of, hey, be cautious because if you exceed this limit, then it's not going to be deductible.
Okay, good. Thank you.
That's my
I
understanding.
appreciate all this information. Awesome information. Thank you
Oh.
so much.
Yeah.
Anybody else have any questions?
I don't have a question, but I'm going to throw this out there. Keep in mind, CPAs are not specialists in all tax brackets. I would interview your CPA and see if they specialize in home-based businesses. It's kind of like the old scenario that every lawyer doesn't specialize in every law. So every CPA also doesn't specialize in every tax brackets.
That's a very good point, Stacy. Very good point. You probably don't want to get a huge corporate tax guy or gal because they may only be familiar with the big corporate type tax rules. Typically the big corporate people, the bigger people, also won't be quite as aggressive because they know they have to protect themselves from a risk perspective. So to Stacy's point, make sure you have a good relationship and you feel really comfortable with who that's going to be. One, that they know their stuff, but two, that they're going to meet however, and quite frankly, every one of you is different in how risky you want to be. Some of you may be pretty aggressive and say, you know, Hillary's situation, I'm going to deduct 100% of that purchase because I had to purchase it to grow my business. While some of you may say, I used it for personal consumption. I don't know if I'm very comfortable with that. So just make sure you get a tax advisor that meshes well with you, that you guys, they understand your personality and your style and they'll work with you.
Okay, I have a question. If you have an admin and you set up the LLC and do they work for that corporation, for that entity, and you have to send them a W-2 at the end of the year? Is that how that works?
Yeah, well, yeah, Melissa, yep. So if you now have an entity, because again, you're the CEO of your entity, if you now have an entity and you're hiring someone to come in and do admin type work for you, there's one of two things that have to happen at the end of the year, and make sure that they're from this entity, not from you personally, right? That they're associated with this entity. There's one of two things that have to happen. They're either qualified as an employee of that entity, or just like you guys, they're an independent contractor of that entity, and they're coming in and they're helping you as an independent contractor to do your stuff. And you say, well, what's the difference? An employee, you have to file a W-2 for at the end of the year. So you have to give them a W-2, and then you have to file your associated form with the IRS to let them know that you had an employee and this is how much you paid them, right? So there's an employer form. But the other thing is with an employee, since they're an employee, you actually have to do some withholding of income taxes for them, right? And so again, tax advisors can help you set that up to make sure that you're withholding the right amounts. So that's an employee. As a contractor, if you're just saying, hey, listen, can you come do some contract work for me and help me do some of this stuff, you know, and I'll pay you as a 1099. At the end of the year, you then should be giving them, if they earn more than $600, just like the same rules for you guys. If you earn more than $600, you need to give them a 1099 at the end of the year, similar to what we send you a 1099 at the end of every year. You would have to send them a 1099 saying they provided services to me and I paid them so much dollars. 1099 to them, and then to the government, you file a form 1096 to say, hey, government, here's my 1096, and it tells them how many contractors you had and how much you paid them. And then they make sure that that matches up. So Melissa, those are one of the two scenarios. If you have an admin that you hire specifically for your business to help you, then you do need to either do a W-2 or 1099. Easiest for you though is to say they're a 1099, and then just because that way you don't have to worry about taxes. They have to take care of their own taxes, similar to you guys. But I will say this: the IRS and more governments, state governments, are making it very, very difficult to prove that you're actually a 1099 contractor and not an employee, because the government wants you to classify them as employees, because then the government knows that you as the employer are withholding the income taxes and giving it to the government, as opposed to hoping that the 1099 person files a tax return and submits their taxes. So the government wants, so a case in point on this one is in California. In California, they passed a bill, California, surprise, surprise, they passed a bill that even Uber drivers had to be considered employees, not 1099 contractors. And you're like, what the hell, how's that even happen? I mean, they can work whenever they want to work. Uber's not making them do certain hours. They work whenever they want. They provide their own car to do the work. But again, certain states are starting to get super aggressive about whether you can classify people as employees or whether they can be 1099 contractors. In fact, Washington got super aggressive. They've come at us at Zingular saying, oh, all your distributors that are in Washington, you have to consider them employees. And we're like, no. And so luckily up to this point, the network marketing industry has still gotten away with all y'all are independent contractors, not employees. Because that type of stuff would be pretty devastating to the industry as a whole. Because one of the things Uber had to start doing in California, if they're an employee, they now have to pay benefits. They now have to give them PTO, pay time off, right? All that stuff because they're now employees. And if you're Uber and your whole business model is based on keeping prices low, how do you compete with that? So it becomes difficult. So just be cautious, Melissa. But if you have an admin, make sure you are talking to your tax accountant, because you'll have to classify whether they're employees or 1099 contractors.
Okay, is that the same go for you? Does that say when you pay yourself out of the entity? Do you have to do you have to file any kind of, give yourself another 1099 or anything, or?
No, Melissa. So typically, remember how I told you there was two types of organizations? There's this LLC and then there's an S Corp. An LLC, if you're the owner of the LLC and you pay yourself out of the LLC, that's just considered a distribution. Like it's not taxable, because really they're just going to look at the corporation level and tax that. So that there's no 1099, there's no W-2. It's just a distribution to you as an owner. Now, an S corporation, and this is one of those ones where I said it's a little more complex, but the benefits can be pretty large. As an S corporation, you can, Melissa, set yourself up as an employee of your S corporation and pay yourself a salary, and then take the rest of it as just investment income. So let me tell you why this is important. So let's just assume that you have an S corporation and you earn, let's just say $100,000 in commissions, right? You have $100,000 in income that you earned from Zingular. Well, as an S corporation, you can say, well, I'm going to pay myself a reasonable salary. I'm going to pay myself $80,000 as a salary. Of that $100,000, I'm going to consider $80,000 to be salary. Well, on the $80,000, you still have to pay all the normal taxes that you're used to, the self-employment, all that stuff. But on the remaining $20,000, you don't pay any of those self-employment taxes. It's all just a return of investment. It's a capital gain type thing, type income. And so you can save taxes on that. And so what people will do is a lot of times they'll set up these S corps and they'll be like, well, a reasonable salary is $20,000. And so they take $20,000 and then $80,000 becomes capital gain, like investment income to them. But again, that's more risky, and the IRS will come after you if they find out that you're taking too low of a salary. So, so that depends, Melissa. If you have an LLC, there's no problem. Just make yourself the distribution. It's to treat as a distribution. If you have an S corporation, you could potentially be an employee. Then you would have to do a W-2 at the end of the year because you were an employee for that portion.
Gotcha. That makes sense. All right, anybody else got anything? I appreciate you staying on and talking to us. And I think this is really important because it's you know, you do all the work and stuff. And if you're going to be a business owner, you got to learn the business stuff.
Yep.
So,
Yep. And that's the key. That's the key is you've got to start thinking of yourself as a CEO. You're no different than Russ right now. You're running your business. So start treating it like a business and taking the advantage of that stuff.
all right. I don't see any more questions. Anybody want to unmute and ask anything really quick? If not, we're going to let him get off here. Josh, you are awesome. I appreciate it. And hopefully you'll be able to see all these people in Dallas in a couple of months.
Oh yeah.
Excited.
Yeah. That's gonna be
Everybody's saying thank you, thank you, thank you, thank you, thank you.
Yes, thank you. And let me put a plug in for Dallas. Those of you that went last time when we had it down at the Gaylord in Dallas, it's a beautiful facility. Like it's a lot of fun. So, and the after party, a lot of fun. So
Oh yeah,
you can make sure to be there. It'll be a good time.
it will be. All right, you guys. Thank you, Josh, so much. I appreciate you taking your night out and helping us. And I'll let you go. You guys, I love you. And we're coming up on the end of the month. I really thought this was important here at the end of our month to really to take advantage of that that training that we have since he's available to us. I don't want to not take that advantage when we can learn how to be business owners. But from now till the end of the month, a lot of you are got goals that y'all are working on, and I'm going to tell you right now, there is nothing and not one goal that you guys have set for yourself that you cannot attain. Not one. That we had the Steals and Deals event last night. Use that to your advantage through the end of the month. Use whatever you have. The free bottle of Zing. Think outside the box. He just said you're the CEO of your own business. Come up with your own promo. Come up with a way to incentivize. Try to find your business owners. Help people get what they want. You'll get what you want. Does anybody have anything before we hang up? Nope. Thanks for the other teams that jumped on, but I'm going to finish it by declaring Ephesians 3:20 over this team, Stacy's team, Carrie's team, anybody else's team that's on here. God will do exceedingly and abundantly more than we can think or ask because we honor him. His blessings are going to chase us down and overtake us. We are in the right place at the right time, and I declare a boldness to rise up in each one of you. God will open supernatural doors. People will seek you out. We will rise in the ranks and we'll give him all the honor and glory. Love you guys so much. Have a great night.
See you, everyone.
Thank you,
Bye.
Melissa. Thank you, Josh.
Thanks,
Bye, you
guys.
guys.